for the calm down. See it in your eyes, moving in your mind, wait for the sound. Hands up to the sky, wanna see you losing control, yeah, losing control, yeah. Don't get too high for the calm down. Don't get too high for the calm down.
All right, guys, what is going on? What is good? What is good? Welcome to the live stream, dog. There we go. There we go. Welcome everybody. Bank holiday today. Obviously, I mean, I haven't done anything. I don't think it's a good day to trade. It's just my opinion. But I do believe that it's a good day to learn. It's a good day to read. It's a good day to grow. It's a good day to elevate. Know what I'm saying? It's a good day to drop a like on the stream. You know what I'm saying? So, what we'll be doing is an introduction into futures trading. So I'm still getting questions on this. What is futures? Why did the things that you trade look different from what I trade? All that type of stuff, right? I keep getting those questions. And so I made a very quick PDF. I'll be honest, most of it was done with AI. So I didn't want to take the time to, spend hours and hours and hours putting something together that was going to be fundamentally the same and just very simple. So I just had AI do it. Now I changed a couple things, but just for, sake of transparency, AI did most of this, especially the images, but the content nonetheless is still worth learning. Okay, still worth learning. What's good? Mason, Naruto, Eminem, Willow, Eberneth, Bazell, Amin, Remy, Mark, Convicted Capitalist, Shay, Robin, Maximiliano, Flacco, Martin. What's good, everyone? What's good? So, introduction to futures trading. All right. So this document, it's like 7 pages. It's a comprehensive guide to understanding the fundamentals of futures trading. It is designed for beginners who are looking to grasp the essential concepts, strategies, and risks associated with trading futures or trading futures contracts. Okay. And thank you, Mason. I just put that up the other day. I'm glad you guys can see it. By the end of this course, well, PDF rather, you guys will have a solid foundation to navigate the futures market and make informed trading decision. All right. So what are futures contracts? They are standardized agreements to buy or sell a specific asset at a predetermined price on a specified future date. That's why they're called futures, right? These contracts are traded on futures exchanges and can involve a variety of underlying assets, including commodities, currencies, and financial instruments. Commodities like gold, silver, other oil, stuff like that. Currencies, euro, British pound, Australian dollar, dollar index, so on and so forth. What I'll be talking about today is the 3 indices, basically. So won't be going like, this is an intro to futures, not like an advanced futures trading thing. Okay. What's good? Toby, Felix, Sergio. What's good? All right. So kind of a cool image, I guess, but you have your asset, the contracts, the price, and the date of the execution, basically the expiry of that contract. Okay. And I'll probably share this later in the Discord if you guys want. All right. Key components of futures contracts: underlying asset. That's the asset that is being bought or sold, such as oil, gold, or stock indices. You have your contract size, the quantity of the underlying asset specified in the contract. So meaning, like, when I posted the other day that I was trading the micro Nasdaq, I told you I was long 5. Then I got out 1, another 1, and then the final 3 on the way down. That's the contract size. I had longed 5 contracts. Does that make sense? So think of contracts like a standard lot in FX or Forex, right? But unlike Forex, contracts cannot be broken down. So there is no 0.5, there is no half contract or anything like that. It's full contracts. 1, 2, 3, 4, 5, so on and so forth. That's basically how that works. Okay. Expiration date, the date on which the contract must be settled. Now, I don't hold contracts to expiry. I mean, I did accidentally a couple times in the past, but I'm usually a day trader. So I'm, in and out within a day. I rarely hold overnight, but if you decide to do that, eventually it will expire. All right. Settlement, the process of fulfilling the contract, either through physical delivery of the asset or cash settlement. So us as traders, we do not have to worry about physical delivery of a contract. For brokers in today's world, it's going to be cash settled. Okay. So you won't have like a bunch of corn show up on your doorstep. You know what I mean? So it's all cash settled. All right. So there's kind of another image, I guess. Your asset, contract size, expiration date, and the settlement. All right, it's pretty self-explanatory how futures trading works. Futures trading involves speculating on the future price movements of the underlying asset. Traders can take two primary positions: long, buying a futures contract with the expectation that price will rise or go higher. The inverse, a short position, you're selling a futures contract with the expectation that price will fall or that price will trade lower. All right, it's as simple as that. Long, you think it's going up. Short, you think it's going lower. Okay, you guys with me so far? Keep thinking. You guys with me so far? Drop some ones in the chat if you guys are like, yeah, this is pretty simple, pretty easy, pretty straightforward. You guys with me? All right, cool. Moving on. So let's talk about the leverage, okay? The leverage is not the same as something like Forex, okay? One of the key features of futures trading is the use of leverage. Traders are required to put up margin, which is a fraction of the total contract value. This allows traders to control a larger position with a smaller amount of capital, but it also increases the potential for both gains and losses, right? Gains and losses. Most of you know how that works, right? Leverage can work for you as well as against you. It's fun when it works for you, and it sucks when it works against you. All right. While futures trading can offer profit potential, it also comes with substantial risks. Some of the primary risks include market risk, just the risk of losing money due to adverse price movements. Maybe you bought a long, or maybe you went long, you bought a contract, and price goes lower. So, that's the risk that you take. That's speculation. Okay. Leverage risk, the risk of losing more than the initial investment due to the use of margin, right? So in futures trading, your account actually can go negative. Now, I've never done that. Okay. But it is possible if you're over leveraged and you get like limit up days and limit down days and stuff like that. The reason that this most likely will never happen is if you are trading the indices. The indices are highly liquid, and a lot of brokers will probably hit you with a margin call. They'll probably cancel or like close your trades for you anyway before it goes negative. It's not perfect, but brokers understand that when certain conditions are met, they might do what they can to protect themselves, basically. And because the broker doesn't want you to owe them, right? Or the clearinghouse and all that shit. So they don't want you to go negative, hopefully. All right, liquidity risk. Again, you probably don't have to worry about this as a day trader. As a funded trader, you definitely don't have to worry about that, because Top Step won't even let you trade certain assets anyway, certain contracts anyway. The risk of being unable to buy or sell contracts without causing a significant impact on the price, right? So if something is super thin, like thin liquidity, that could happen. But again, if you're trading indices, that's probably not going to happen. So I wouldn't even honestly be concerned with that. All right, so there's some of the risk: liquidity risk, market risk, and leverage risk. Okay, so there's that. All right, strategies for futures trading. Why does the futures market even exist? Most people don't understand. What's good, Hartman? What's good, Stephanie? The futures market is not for you and me. The futures market was for, or it was created for the commercials, basically, the farmers, corporations, and stuff like that. I won't get into it. I've explained it more than once already, but basically commercials, what they're doing is hedging, because they want to lock in a certain price to be able to get rid of their goods. So like corn, wheat, cotton, stuff like that, actual producers of commodities, they're gonna, I guess, go long by producing actual things, real things. And what they can do is they can hedge their position with the futures market. Like, so say they produce, I don't know, 100,000 bushels of corn. They could short 100,000 bushels of corn as a hedge to protect in case something happens. So if the price goes up and they're short, I mean, they do lose money on the short, but they make money because they have the physical product to sell it. And let's say, again, they produce 100 bushels of corn, and then they short 100 bushels of corn. If the market goes down, they'll lose money on the physical side because they're going to sell it for less than what they produced it for, but they're going to make money on the short positions. Does that make sense? So it's all like a hedging thing for them. And they're not hedging to, I guess, limit downside. I mean, they do, but they're hedging in order to lock in that profit. Does that make sense? So that's all it is. They're just locking in, $2 a bushel or whatever it could be for that product. Okay. That's why that's why the futures market exists. What we do is not hedging. What we do is speculation. So we're taking positions based on market predictions to profit from the price movements. So we could say, hey, corn is going to go up because there's a water, or there's like a famine, there's a lack of water and all this shit. So we think commodities could go up. So we could buy commodities. And if they do go up, then we could make a profit. That's speculation. And there's risk involved in that. What if we're wrong? We could buy it, the market could go lower, and then we lose money. So there you have it. Arbitrage, exploiting price discrepancies between different markets or contracts. I'm not really going to get into that. That's not something that I do, but that's it. Okay. So again, hedging, speculation, or arbitrage, but as day traders, funded traders, even swing traders, if you have your own account like that, that's what we're going to be doing, is speculation. Okay, we are speculators. All right, so in conclusion, futures trading can be a rewarding venture for those willing to invest the time to learn and understand the market. By grasping the basic concepts, risks, and strategies outlined in this document, beginners can start their journey into the world of futures trading with confidence. As with any investment, it is crucial to conduct thorough research and consider seeking advice from financial professionals before engaging in futures trading. Okay? What's good, Jordan? And thank you, Red Pill. Appreciate that. All right, so this is kind of where I stepped in and added like my own stuff, because again, I don't really trade commodities that much, not on the futures market. anymore. But these are the three I primarily trade. So the index futures, the three main, right? ES, NQ, and YM. So ES, which is the S&P 500, is a derivative that tracks the S&P 500 index. It's one of the most actively traded futures contracts in the world and is listed on the CME Group, right? The Chicago Mercantile Exchange. The tick size, 0.25, right? So that's a tick, one tick, and every point, okay, has 4 ticks. Right? So every tick is going to be worth $12.50. It's a lot. It's $50 a point per contract. It's a lot. Right? So one full point is $50. So does that make sense? 50 divided by 4 is 12.5. Okay? 12.5 plus 12.5 is what? 25. 25 times 2 is 50. Does everybody see how we got that? The E-mini S&P, $50 per point, or $12.50 per tick. Now, I didn't include the micros, and most of you will start at the micros. This would be 1/10. This would be 1/10. So it would, instead of $50 a point, it would be $5 a point for the micro. Okay. NQ, also known as the Nasdaq, is a derivative that tracks the Nasdaq 100 index. It's traded on the CME and is one of the most popular futures contracts for traders looking to gain exposure to the technology, right? The tech sector, tech heavy Nasdaq 100. Its tick size is $5 per tick, or $20 per point, right? Again, 4 ticks in every point. So if 1 point is $20, that's $5 per tick. And the micro would be 1/10 of that. So micros would be $2 a point, or 50 cents a tick. Yeah, I think quick math. All right, YM, or the Dow Jones, is a derivative that tracks the Dow Jones Industrial Average. It's also on the CME, and it provides exposure to the 30 blue chip stocks in the Dow Jones Index. And that's just 1 tick is 1 point, which is at $5. All right, $5 per point. There's a little image for you. All right. ES for the S&P. Nasdaq for NQ, or NQ Nasdaq, right? And then YM, the Dow Jones. And this is the end of the PDF document where you can get some more information. CMEgroup.com, ICE futures, okay? And the CFTC.gov website. All right, so CMEgroup.com, that's going to tell you all of the margin requirements, maintenance margin, contract expiry, all that type of stuff. I would even say, what's that one website we use? Barchart.com as well. Barchart.com will tell you a lot as well. I know, well, I just couldn't help myself. It's just, you know, today's world is today's world. So there you have it. All right, and that's it. Okay. So again, like if we go to ES, for example, I got on my, actually, I'll just leave it here because I was going to show you this anyway. I logged into my paper trading account, so that way, like say we can't place an order at the moment. It might let me put a limit in, I guess, possibly. So limit at 6,134. All right. If I have a limit order, if I want to be long, okay, like let's say I'm going to buy at 61.34. If I have a stop loss at 61.33, That's 1 point, right? From 34. If it goes down to 33, that's $50. Does everybody see that right here? $50. So if I went down to 32, that's 2 points at $50 a contract. Now that's $100. You see how we got that? And this is one thing I love about TradingView as well. If you log into your broker or whatever, or if you have a funded account and log in to your funded account through TradingView, this will help give you that information, and it'll tell you your percentage as well. Now, this is a pretty fat account because it is a paper trading account. I think it's sitting at like 480,000. So 480,000, if I'm risking $100, that means I'm risking 0.02% of that account. Okay. Now, the TP is going to be basically the same way. If I want to long at 134 and I want to get out at 44, right? Long at 134, a take profit at 144, that's 10 points. So at 10 points, $50 a contract, that would be a $500 move. All right, not that difficult. You guys with me? Drop some twos in the chat if you guys are understanding how this works. I guess we'll get into the charts in a minute too. Well, I mean, we're on the charts, but I'm just trying to give you like the information here. What TradingView provides. How many ticks is your stop loss, your take profit, you know, the price levels, how much that's worth in a dollar amount, and how much that's worth in a percentage amount. That's very important information. And then the time, if you want to, like if I'm not filled by the end of the day, it'll cancel. Or if I'm not filled by the end of the week, it'll cancel. Or GTD, I think, is good till, I don't know, death or whatever. I'm not even sure what that means. But usually it's usually meant to say good till canceled, but whatever. Right? So the inverse would be the same. Like if we were going to sell, right? If let's say we had a sell limit at 6150, we can't have a stop loss below it. It has to be above it, at least in the beginning. So 61, let's say 55, 5 point stop at $50 a point, $250 stop loss. Take profit would have to be lower, at least initially putting the order in. So at, I guess, 61.24, it'd be $1,300. Definitely not bad. $250 sounds like a lot of risk. I get it. It sounds like a lot of risk. Like, oh man, that's a few days, maybe a week or two of groceries, right? But look at that reward, $1,300. That's when futures gets fun. Futures isn't fun when you lose 1,000 or a couple thousand in a trade. That shit is not fun. But when you're able to make that much in a day, that's when shit gets rocking, you know? But again, just like we talked about in the PDF, it doesn't come without its risks. Without risk, there's no reward. Okay? So that's ES. That ES to me is the most simplest. There's not a lot of points involved, like on an intraday basis. It's easy to do quick math versus like punching in the numbers. NQ is different. There's a lot of ticks. There's a lot of points. Sometimes based on, let's say, a setup, like if you're seeing a similar setup in ES and the same setup in NQ your risk might be more. You understand? The reward might be more too, but sometimes I'm not comfortable trading NQ because the numbers can get the numbers can do numbers. All right. So like, let's say for example, we just wanted to long at the market. If we had a stop like at this low, 22,192. I think that's right. Is that right? 192. Yeah. So on a 15-minute chart, from where it is right now to the low, I mean, that's a $770 stop loss. That's putting in orders like that. That to me is when, you know, there's a reason I try to get better entries. You guys understand? Like, there's a reason I try to get you guys to understand the actual sniper entries and not this drawdown shit. Because you take a lot of drawdown, you're going to see big numbers, and that will screw your psychology up trying to see that shit. New high up here, let's say 281. You'd be risking about 770 to make 1,000 up here. So a little over a 1-to-1. 1 to 1.3. See that? That number right in between take profit and stop loss, that is your risk reward based on the numbers. Okay? So, for example, let's go over to take a look at Friday for just a minute. All right. So on Friday, when we were looking at the 5-minute chart, there was a imbalance in here. If you guys remember that. And there was a inversion as well. And yeah, Flacco, I would agree. I would agree. Punching in the account info. So, for example, that I put in an order before we started the stream, and then I logged out, and then after the stream was over, I logged back in. I did not think that I got billed, and you know, that's why I didn't say anything, because I wanted to see if we would dig into that imbalance, and we didn't. I didn't think I had an entry there. When I logged in, I realized your boy had a perfect entry, and that's when I was like, oh shit, let me talk some shit. So, but that's not what it's about. It's about going, okay, if we were on a, let's say a live account or like a funded account, or a lot of you are funded with Top Step now. If I was going to redo this whole order, okay, for ES 132, if I wanted this to be a breakaway, my stop could go to this low. So what I could do is kind of have this order here. You see how I hit buy limit? What I can do is take this stop loss and drag it to where I want it to go. And I know it's kind of light because the order's not in, but it'll show you the dollar amount based on your like trading view settings. Okay. So maybe I think, you know what, that's a little bit too tight of a stop loss. Maybe I can go to, let's say, the low of this candle down here. And I can go, yeah, that's a pretty good stop. All right, that's $300. Maybe it's too much. Okay, well, we could go maybe to this low. All right, 260. Yeah, all right, I'm a little bit more comfortable with that. Boom, we can put that order in based off the risk. Now we got to talk about reward too, right? So if we're aiming for a new high of day, which price didn't get to obviously, but at the time when you're putting an order in, you got to know like what's your TP and all that shit. We could go one tick above current high of day. So we'd have to think and say, okay, risking 260 at the most, maybe 280 if we get slipped, right? 280, maybe 300 if we get slipped pretty fucking bad. Usually doesn't happen. And then, okay, cool. Our reward would be 675. So is that acceptable to you? If it's acceptable, you could put that order in. Or if you come over here, maybe you don't like the RR. Oh, that's only a 1 to 2.5. That's not good enough. We either have to move the TP up to bank a 1 to 3, or you could say, oh, well, shit, I don't know about that. Maybe I can tighten the risk a little bit to get that 1 to 3. Okay. But anyway, the point is you can get the numbers on the chart. You can get the numbers over here on TradingView as well. So that way you're not confused. How much am I risking? What's the percentage? All that shit. It's there. Okay. All right. So it let me put the buy limit in here, and now the numbers are solid. You see how that works? So they're solidified. Okay. Now let's say we don't want to look at the money. You're like, oh shit, dude, those big numbers, my hands get all sweaty, and it's not okay. It's not good. What you can do is, they're in here somewhere. Under the appearance, right? Under the trading tab, under the appearance, you can go and take off profit loss. Or if you want to show the profit loss in percentage or ticks, you can do that. So whenever you get filled, you know, it'll be, green or red based on the amount of ticks. Or if you just don't want to look at that at all, you can just take it off. The brackets in profit and loss, right now I have it set to money. If I change that to ticks, now it just says, oh, your stop loss is 18 ticks. Your reward is 54 ticks. So that psychologically might help a lot of people. MT4 does the same thing. Instead of dollar amount, you can change it to pips. Now, since we're trading the futures market, it doesn't work in pips. It works in points, ticks and points. Okay. Or you could just do percentage. All right, I'm risking 0.07% to make 0.22%. And you might look at it in that light going, oh yeah, I'm totally fine with that. And then you can, place your trade and do what you got to do. Or you could just not have it on there at all. But I don't know why you do that, personally. Okay, so you see how we did all that? Those are all the options that are available to you. Looking at the money, which I usually do look at. Or ticks or percentage. All right. And that's pretty much it. So every setup that you're looking at, if you're putting in your entry, your stop, your TP, if you look at the numbers and they're not good, either adjust the numbers, adjust the orders, or if you can't find a justification to do that, then you just don't take the trade. That's what I do. All right. Like, say I wanted to long at this imbalance and I had to stop at this low, but I was like, you know what? 300, let's fix that. All right. $300. No, that's a little bit too much. And I don't want to put it too close to the market. I just can't find anything. All right. I'm just going to not put the order in, or I might put it in and just cancel it and say, you know what? It's too much risk. I can't do it. And you just walk away and that's it. All right. That's pretty much all there is to it in terms of like the introduction. There's all kind of stuff that you can trade. Dow, S&P, Nasdaq. There are, I don't have it on here. Currency futures. So you have Euro, which is basically the Euro USD, but different. British Pound, GBP USD, but again, the future side, so on and so forth. Australian dollar, New Zealand dollar, Canadian dollar, Swiss franc, yen. We even have gold as well. I don't think this is the right contract. This is 2024. That ain't the right one, but gold will do the same thing. Like if we go, let's say, to the gold futures market, same thing. I could buy it right now. Stop loss below equal lows. Right? Stop loss below equal lows. That would be a $390 loss. Okay? And that is an introduction to futures trading. You guys have any questions, you can throw them into the chat. But I feel like it's pretty self-explanatory. If you're a trader, like, you just have to know what it is that you're trading. And you have to obviously know what your strategy is. Targeting equal highs or equal lows, or, whatever it may be. But if there are no questions, then I'm going to stop the recording so I can probably clip that and upload it later. But otherwise, that's it. That's all I got for you today. Nothing crazy, nothing wild. Just, it's a bank holiday. We closed at 12. We'll reopen again at 5, but you know, indices aren't open and it's a pretty chill day. It's cold, but it's a pretty chill day. So unless you guys have any, I'll give you like a minute or two to ask anything. But if not, I'll go ahead and shut down the stream because that's it. And remind me to drop the PDF in the Discord later on. Anthony said no trade is the best trade on a bank holiday. I mean, I've traded on bank holidays before, but I would say more times than not, it's probably better to stay out. Thank you, Stephanie. Flacco has a question not related. Well, what is it then? What is it, Flacco? Would it be? What do it be? I might have time today to shoot the 48 Laws video. I might do that. Appreciate that, Ghost. Thank you, thank you. Dude said in Fortnite terms. Y'all are something else, man. Y'all are something else. Where's Flacco at? He's over there writing a book. Yesterday's Zoom call, I saw one of your favorite tools is the parallel channel. Don't be lying, Flacco. Don't be out here fucking lying. Don't be fucking lying. No, I don't even know why that's checked. I don't use this stuff. I added it one time, but I don't use this like favorites bar. I always have that off the screen, and I like to use this side. I don't use that favorite stuff. So I don't even know why that stuff is favorited. I'll take it off now because you fucking just had to mention it, did you? Get him out of here. Get all the favorites out of here. Just because of you, Flacco. I should favorite the shit emoji is what I should do. I don't think we can do that. I don't think we can do it. So, yeah, Flacco's banned. Banned immediately. Immediately. I remember the old IM times. Yeah. Pretty good times. Pretty shit times, too. That's the Dow Jones emoji. Yeah, you're not wrong. You're not wrong. All right. Well, that's it. Y'all be blessed, man. We'll be here same time, same place tomorrow on Tuesday, the 18th, 1 p.m. EST, which is 12 noon CST. All right. Be blessed. I'll see you tomorrow. And yeah, Robin, that's a good point. I do not message you guys on Discord individually unless you message me first. I don't send anybody money. Don't, send Bitcoin, nothing like that. All right. There's people pretending to be me, but I'm one of one, baby. I'm one of one. All right. See you tomorrow.
fear becomes a storm to cause us. Calm where there once was fear. Calm where there once was fear. Awake and the snow has cleared. Spring in the dust atop the highland. How fast gets a lunar year? How fast gets a lunar year? Oh, but I feel so new to be so understood. You got me humming. Oh, couldn't be altitude. You're so divine, so good. You make the earth commute, baby. Do you feel the magnitude? To the beaters and beats. To the beaters. To the beaters and beats.
This is Planet Liquidity.
Try and hide. Something's going on inside. We know we felt it. We know we felt it.